Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major, EURUSD, Dimitrios Tapas describes.
EURUSD is trading around 1.1866. Within the downtrend channel formed since January 23. Below the 21 SMA, it's a sign line on the graphic. Under bearish pressure. On the 4-hour chart, the area is showing signs of exhaustion and is likely to resume its downward cycle in the coming days, potentially reaching the 200 EMA around 1.1794. If EURUSD breaks decisively through the downtrend channel and consolidates above 1890 around the 21 SMA, the outlook could be positive and we could expect it to reach the 6-8 Murray around 1.1962 and finally reach the 7-8 Murray around 2085. Given that the area is under downward pressure, if a pullback towards the upper bound of the downtrend channel occurs in the coming hours, it will be seen as an opportunity to open short positions, with targets at 4-8 Murray, located at 1718. The Eagle indicator is showing a negative signal, so EURUSD will likely continue to fall in the coming days and is expected to reach the psychological level of 1.1500 in the coming weeks.
And we're starting with pound sterling dollar pair with Dinler.
On the hourly chart, the GBPUSD pair made two more pullbacks on the 35.95, 36.20 support on Thursday. But the bears are still unable to overcome this area. This zone represents the British pound's main source of hope. A rebound from this area today would favor the pound and a new rise toward the 161% corrective level at 1.3755. A consolidation below this zone would increase the likelihood of further decline toward the 1.3526, 3539 support level. The wave structure remains bearish. The latest downward wave broke the previous low, while the most recent upward wave failed to break the previous peak. To shift the trend back to bullish, the pair needs to consolidate above the lost peak at 1.3730 or form two consecutive bullish waves. The news background for the pound has been weak in recent months, but the news flow from the US has also rarely given traders much reason for optimism. Bulls have regularly received support from Donald Trump and weakness in the US labor market. On the 4-hour chart, the pair rebounded from the 127% Fibonacci level at 1.3795 and has since continued declining toward the 33.69, 34.35 support level. The bearish trend on the hourly chart has not yet ended. A consolidation above 37.95 would allow expectations for a continuation of the bullish trend toward 1.4020. No emergent divergences are currently observed in any indicator.
That's all for today. See you online soon.